Hi, this is Keith Schneider, CEO of MarketGauge.com. This is October 27th edition of Market Outlook. So, as the market continues its relentless drive, let's delve right into the charts. Also, before I start, don't forget to sign up for this newsletter. You get it free delivered to your inbox every week. www.marketgauge.com, and there's a easy place to fill out the form. Okay, first of all, the S&P, as you can see, um, good economic news in general, and we are now after the Fed non-tapering. um, Market has steadily moved up and is at the very top of the channel, and really depending on how you draw it, it might even be exceeding the top end of it. So that's fairly bullish action. Obviously, you can easily see where you could, if you break out of this upper channel, you could actually establish another accelerating uptrend here. But if we delve a little bit deeper, the critical prices that we have to hold is this 10-day moving average, which comes in around 173.50, as well as this wick or the low on the 18th of October. The reason why this is a fairly critical level, let's take a look at the charts. This is uh, really some a combination of some common sense slash old fashioned tape reading. The reason why that is a very critical level is because you've got 1, 2, 3, 4, 5, 6 days after taking out the all-time highs where the market has traded in a relatively tight range, clearing out all the stops and bringing in new buyers. Now, if we can take out on the downside that particular low and the moving average, it means all this new buying is trapped. And it could be a signal of at least a short term to intermediate term top. On the other hand, if we can get some follow through, probably a lot will depend on how Apple does. You can actually see a super acceleration to the upside as well. So key level here is that 173.50 level or so. One thing to note, we have had more accumulation days over the last couple of weeks, but the breakout to new highs was not on excessive volume. So something to take note of. Let's get into the indicators. Well, as you can see, this particular chart here, the McClellan oscillator, which is our intermediate a couple weeks out look, actually got to overbought levels and has hooked down. Now, since it's hooked down, it's actually still gone up, and that generally is a sign of strength. You can see a couple times it's done that. In fact, one of the times it did it was right here back in May, where we actually hooked up, got overbought, and the market continued to go higher before it actually sold off. And it did move up substantially higher, like another 3-4%. So it'll be interesting to see. And again, please refer to those price levels I just gave you, because the hook down here is definitely something to note, but the market action is showing something else. Um, Now, the other thing that we also like to do is look at the advanced decline up-down volume ratio on a shorter time period, which gives you a signal looking out about 5 days or so. And what we like to see is a confirmation of both the up-down volume and the advanced decline getting to overbought levels and hooking down. So far, we have not had that in the advanced decline. So breadth still is strong, although volume is definitely showing signs of weakness. So we're going to keep track of this advanced decline, and indeed, if we do get within a few days a hook down beneath the plus 2000 level, that would be a real confirmation of a sell signal. But meanwhile, the market is, this is the short-term indications on the market internal is mixed, right? The McClellan oscillator, which is the intermediate term, is a bit sort of neutral because the price action has not really confirmed this overbought reading. Let's take a look at market sentiment. Taking a look at the VIX indicator, interesting. Here's another yet sort of screwy view of what's happening. Is number one, we are trading under the 200-day moving average in the middle of the bands. Now, considering that we virtually have made a new high, the VIX really hasn't made a new low, and that's sort of interesting that there still remains some divergence between the market on new highs and the VIX indicator not making new lows. In addition, you sort of had a reversal pattern in here, and on top of that, the 50-day moving average after this huge spike up is still above the 200. So sort of mixed signals on the VIX. That's, we're reading into it a little bit. I mean, overall, clearly there's not extreme optimism, and you're basically still overall in what I would consider a bullish mode. However, short-term trading pattern definitely is showing you that if we can hold the spike low from earlier in the week, that this is sort of a cautionary, still slightly positive slant on sentiment. Let's take a look at silver. Silver is quite interesting. We broke out above a basically rising 50-day moving average. That's a recovery phase. Friday morning, we opened up fairly sharply down under that 50-day, but by the end of the day, we did recover and close basically on the 50-day moving average. Now, a couple things to note about the metals. This is definitely starting to look like a bottoming formation, certainly if we hold that 20 level in silver. And the count, if you look at the count, this sort of looks like the head and shoulders bottom. If we can get above 24, we're looking at a count of almost $5 to $6 an ounce in silver, right? You take the neckline, which is about 18, to the high, which is about 23 or 24 or so. So you're talking about $6 on top of the neckline. So you're talking about a count possibly up to 30 in silver, but certainly 28 where you see some fairly good size resistance. Now, a couple things looking rather positive overall is the fact that GDX is also showing bottoming pattern on the weekly chart. So you can see you got a key reversal pattern off of close to a pretty critical low, and it looks like you're tracing out a potential double bottom. Adding fuel to that fire is the fact that silver has been gaining over gold. Now, this chart down here is a ratio chart with a moving average. One of the things to note here is the great bull runs of precious metals is when silver starts outperforming gold. And this green line here is a moving average of the ratio. And you can see back in October of 2010, the great bull market in silver, where it ran up to, I guess, about $50 an ounce, was when silver was strongly outperforming gold. And you can see down here, we have sort of moved above that green moving average line and are holding nicely here forming a base, which would indicate that if we can get again through this level here around that 24, it would confirm the breakout of the silver chart. So a couple things pointing to a potential move in silver. May have to endure a little bit of pain back and forth, but it does seem to be looking promising. Let's take a look at the TLTs. This is also interesting. And here we have three charts. First thing is you can see we tested the sort of flattening to rising 50-day moving average on the daily chart. So again, we move from a clear bearish phase into a more positive recovery phase with that move above the 50-day moving average. Now, also important to note that the monthly chart here, right, has held this key 80-month moving average. So along with the recovery phase on the daily chart and holding the very long-term 80 monthly moving average, you can see that the long-term trend seems to be still intact and the bond model here is still positive. Also, take note that the long-term moving average, the 200-week moving average on the TLTs is also being broached, and that would again improve the overall phase. So moving on to a single stock, we have Tesla. And I just want to point out Tesla. And Tesla, I mentioned Elon Musk even thinks his company is a bit overvalued. You can see we moved from the 30 level almost up to 190 as of the close on Friday. We actually are under the 50-day moving average for the first time since its meteoric rise here. So a break above 160, you also sort of have a head and shoulders pattern. You take the count from 160 to 190, you're talking about at least a move potentially down to 130 if we can broach the neckline here at 160. So that's it for now. Have a great weekend. See you next week, and bye for now.